good, everyone? Welcome to the Jeanius indicator tutorial. Now I'm going to pull up the Jeanius indicator settings. Just for starters, what is the Jeanius indicator? So the Jeanius indicator is pretty much it's not your average indicator where it just allows you to just gives you this on and off buy sell signal that has no explanation to it. The Jeanius indicator pretty much allows you to automate your own strategy. So it's not a one-size-fit-all indicator. It's pretty much built to allow you to have the free range to configure it exactly to your needs, to your edge, and then it gives you the signals. But I still wouldn't look at it as just a buy and sell signal, the generic indicator. I would look at it as pretty much like your sidekick that helps you locate your edge whenever it pops up on the computer without you having to, go to every stock and just find your edge. You pretty much can calculate where your edge is going to be depending on what your settings are in the indicator itself. And so this is just going to be the comprehensive walkthrough for the indicator. And then after this one, I'll do the screener and I'll show you how the screener and the indicator coincide with one another. It pertains to keeping up with your edge on other tickers without having to actually be on those charts. And so that'll be later, but that's the Jeanius indicator for anyone that was wondering exactly what this is. So to start it out, we have the data range here. The data range is probably the most important part of the Jeanius indicator, because if you're day trading and you're on smaller time frames, you don't want the date to be too high, because for one, it takes so long to calibrate. But if the dates are too far away from the time frame that you're trading, then that's going to cause the Jeanius indicator to pretty much calibrate a lot slower, and you don't want that. That'll be very annoying. And so a lot of times when I'm on the higher time frames, like the monthly, obviously when you look at the monthly, you have less candles that take up more space. And so you can actually see the 2016 all the way here, versus if I was on the minute chart and it would be hundreds and thousands of 1 minute candles, and that would cause the indicator to pretty much lag. In most cases, it'll freeze out because your date is set too high. So if you're on a monthly time frame, you can feel free to set your dates as high as you need to get whatever signals that you need to get. And so for the sake of the beginning stages of the indicator, I'll set it to 2020. And the reason why I'm setting it to 2020, because it will work a lot faster for the sake of making the video. As you go through your practices or whatever, when you're trying to figure everything out, just play around with the dates and see which dates work better for you on which time frames. But just keep that as a heads up, that it's very important to make sure that those dates aren't too high or too low depending on the time frame you're on. So once again, the higher time frame, further out you can go on your date. The lower time frame, the closer that date has to be to the day that you're trading. So just as a quick example, if I'm on the 15, 5, or 30-minute chart, anywhere down in these minute ranges, then I want to make sure that that date is set at least at maybe at most a week before that. That way you're not calculating unneeded information. You don't need, on a 5-minute chart, you don't need information that's dated back to even last year at any time, because that's not as important right now to the I guess the trend or the price action for that day specifically. So pretty much if you're day trading, if you're going to use it when you're day trading and get some clear signals, and as we go on, I'll show you how this looks on those smaller time frames as we look at SPX, what that looked like, what those signals would look like on those smaller time frames. But yeah, that's that. And so I set the date to, I always set it to the beginning of the year, or I might calibrate it depending on what I like most about it. But if I'm going to go back a year or two, I always just start at the beginning of the year. That's just for me to keep it simple. The end year doesn't have to be this far. The end year could be the end of 2020. It doesn't matter. This doesn't really matter as long as it's further away from a date that we're going to encounter anytime soon, because obviously we won't be able to calculate more data after that because it'll end at that time. The next setting is global settings. So this threshold signal percentage, and if you forget anything I said and you can't go back to the video, then a lot of these settings have information sections next to it where it'll pretty much pop up and let you know what's going on and what does it mean, just in case you need a reminder. But the signals threshold, I pretty much keep it at 0. It's pretty much saying that within what percentage do you want this specific signal to be signaled. And so that means that say you're looking for a support area. A setting of 0 means that that support has to legit be touched. That means that there's no space at all between the support and between the price. And that's actually pretty important, because if you set this too high, you could get false signals. Or you can get signals, but I mean, proximity wise, you wouldn't want to set this super high. And you can play around with it if you feel like it, but for me, I just keep it at 0. These give me the most precise signals, and you'll see as time goes on when I start to build my confluences and show you how when you combine those confluences that you're able to get some pretty accurate signals. Same thing with show signal only during market hours. Now mind you, I may have to switch charts because SPX doesn't have market hours, but if I hit SPY, let me erase all this off the charts. Okay, so me going to SPY has after market hours. And so if I go to like the 4-hour chart, you can see the pre-market, post-market hours going on. The part of the indicator that's asking you if you want to show signals only during market hours, that's pretty much saying that, do you want signals only when the market is open, or do you want signals to also pop up during post-market hours and pre-market hours? The thing is, I like to trade with the extended hours, which is post-market and pre-market, and I also like to see the signals during post-market and pre-market, because at this point right here, I'm pretty sure a signal popped up here, even if it was a liquidity sweep. And so if a liquidity sweep pops up here, a bullish liquidity sweep, or whatever else was here, whether that was a support level, a trend line support, whatever, then I would not have seen this signal, because I would have had it turned off, and then going into the next day, I would not have known to leverage, or not really leverage, but just have that directional bias to wait to watch for entries at whatever levels to get that buy signal here. And I might come back to this. What day is this? November the 23rd. Okay, November the 10th, 2023. Okay, so I might come back to this just to show this signal in the aftermarket or pre-market, only because it's very important to keep that on. If you don't need it on, if you just don't trade with pre-market, post-market stuff, information, then that's okay. I mean, it's all about, I guess, what you like and how you trade. That's the whole point of the Jeanius indicator, and that's what makes it unique, is the fact that everybody's not going to be using this the same way. And I think that's the beautiful part about this indicator. It's going to allow everybody to kind of have that free range of creativity to plug and play, stack combinations to find what their best combination is. And I think you guys are going to have a lot of fun with that. The next one is hide zone labels. So when it comes to hiding zone labels is pretty much for if you have, let's see, if you have a support or let's say a demand zone. If you have a demand zone on, and let's say you have that demand zone set to the current chart, you have the second demand zone that you want to find on the 4-hour, you have the third demand zone that you want to find on the 1 day. And I'm sorry, we're kind of moving ahead. I wanted to kind of keep it streamlined, but for the sake of describing the hide zones label, you might not want to see what zone that came from, because if I'm on the 1-hour chart, but I still have 3 other charts, yeah, I can turn this one off. This one doesn't matter. But no, let's say if I put it to a week, cool. Let's say I'm on the 1-hour chart, and I also have the 4-hour, the 1 day, and the 1 week toggled on here. That means that on that 1-hour chart, it's going to show me supply and demand zones that are currently tapped into on the 4-hour, the 1 day, and the weekly, as well as the chart that I'm on. And to me, that's a lot. And so I would really only look for I would probably look for only 2 demand zones above where I am. Not even the current chart. I would most likely do like two charts above where I am. And I think that'll keep it clean, because if you turn all this stuff on, it looks just crazy, and you'll see how it looks as time goes on throughout the video. To here, and so this is also an important, unique thing that I like about the indicator, is the fact that you can change whatever your signal color is. So once we start building those confluences, or just start attaching those signals, where the indicator tells us where the demands and the fair value gaps and the trend lines, and where the uptrend, downtrend is forming. When that happens, we're able to toggle on what color we would like. And so I have multiple charts that I use, and sometimes my cell is red, sometimes my cell is black, and sometimes my cell is orange. For the sake of this specific indicator, not indicator, but for the sake of this specific layout, I like to use all things that kind of align with the black being down and the blue being up. And so for this specific chart, I would like to make my cell signals black to coincide with my cell candles, as well as my volume. You can see right here where I have my volume kind of aligned with everything. I just like that alignment. It's just, I don't know, it's cool for me. Back to the next section, you have multiple confluences. And so what are multiple confluences? Multiple confluences are areas on the chart where traders of all kinds are kind of meeting in one area, and they're agreeing on the same direction. And so let's say that, I guess for the sake of instruction, let's say that this is the 50 moving average, right? And let's say at this point of the chart, we could say that this was a trend line, and I'll show you how I use Jeanius to do my trend lines as well. So you could say that this was a trend line, which is one confluence. You could say that this is a support or resistance level, or some type of demand zone. So you can kind of, I guess, we'll just put all three. We'll just say demand and support. So that's three confluences at once. So you have a retest of a support, you have a test of a trend line, you have a test of a moving average, which is the 50 moving average on the monthly, and you have a test of a demand zone. Those are like 4 confluences. And if there was some type of like chart pattern or candle pattern, that would also add as a confluence, because you know you have chart pattern traders and candlestick pattern traders, you have breakout traders, you have support breaking retest traders, you have demand breaking retest traders, resistance breaking retest traders. You have all these different traders, and the more those traders meet at specific areas, the stronger the move is going to be, depending on all those traders being leveraged in the same direction. So you want to see a lot of confluences, and you want to be able to play with this. You want to be able to play with the confluences section just by tapping everything on and just going through and just kind of picking just random combinations, and just, you know, that's how I was able to come up with my playbook using Jeanius. I just had to pretty much go through, and I kind of set a certain date. And on that date, and it might work better on smaller time frames because there's more data and there are more pivots and there are more trend line touches and more trends actually viewable on those smaller time frames. You'll see more patterns on smaller time frames. So it might be better to, I guess, practice these different confluences on smaller time frames like the daily or maybe even the 4-hour. But that just depends on, remember, how you set the date, how fast the indicator is going to work. So next up, you have the current signals, and for the draw current buy signals and sell signals. For the current buy signals and sell signals drawings, you have the zones and the lines. So this area pretty much applies to any lines or zones that you select to be drawn. Pay attention to the word draw. It's not a signal, it's drawing, because it could give you a signal. You can set it to where it'll give you a signal without having to actually draw that zone. So you can set Jeanius to pretty much give you a sell or buy signal, or not a sell or buy signal, but a signal to let you know that price is currently at a support or resistance or demand or supply or fair value gap. Those zones can be alerted in the box that will be turning on here. So this is the show current signal position. You can set it at anywhere on the chart, I like to set mine at the bottom here. And usually when I have my screener, I like to set my screener here at the top, which you'll see on another video. But for now, I put my long and short signals here. As these long and short signals begin to stack up throughout this video, you will see that when these signals all align with each other, you will see where the signals actually pop up on the chart. Mind you, you don't need this here. If it's a distraction, you don't need it here. If you just care to see your signals on the chart, that's fine. But another thing that I like to do is, if I have so many signals stacked up for a confluence, I might only see 3 or 4 of those. If I stack 5 and I only see 3, I could still use that as a buy or sell, only because confluences are still confluences. And so whether it's 3, 4, or 5, it just depends on what your rule is. So nothing has to be definite. If your rule is 3 to 5 confluences, but you have 5 set and you're waiting for all 5 to pop up, but you have 3 key ones, then you should still take the trade, because it still aligns with your edge and your rules for entry when it comes to the amount of confluences that you're choosing. So let me move this, because I don't like that it keeps bumping into this trading view sign down here. And so I'll move it to the bottom right instead. That shouldn't take forever. So back to drawing these current signals. So if you turn this draw current buy or sell signal on for any zones or lines, that means that you won't see any of those things on this chart until price touches it. Now, for me personally, I don't like to use this feature because I like to see what I'm working with. But for the sake of just giving you guys a hint, as you can see over here to the left, I have multiple indicators here. Why do I do that? Because obviously you can't stack everything on this one indicator. So what I like to do is I like to create my edge on one indicator, and then the second indicator I like to kind of add, as you can see here, I kind of like to add where I want to see my zones, but I don't really keep it on because I don't really trade supply and demand zones per se by themselves, but I just love to just see those zones. If you just like to see them, or those supply and demand zones, or even those fair value gaps, like right here, this was a fair value gap here. Now, if the price was up here before it touched into the fair value gap, Jeanius would have this either not showing or showing, and as it's not showing or showing, once it's tapped into, then it pops up. Or you can already have it showing so that you know that that area is going to be an area of interest, where if it's a bullish fair value gap, then you know that once price pulls back down somewhere in this area, then you know that you should be looking for some form of reversal at some point, and you pretty much just wait for confirmation on the smaller time frame. Let me turn that off. All right, so now the next section is, which is still within the current signals, the higher time frame supply, demand, trend lines, and fair value gaps. So back to this part, just revisiting these several time frames. This is a cool feature because it allows you to be on one chart, which is once again like the hourly. It allows you to be on the hourly on SPY, and I'll show you what all these things look like. But this allows you to be on, like, maybe let's say the hourly on SPY, but then if you toggle on these three on that hour chart, it would show these signals, if there are any. It would show any fair value gap, any trend lines from those higher time frames, and any supply and demand zones from your higher time frames. But remember that you have to have rules for when you're entering certain trades for supply and demand zones. And so that, remember that when you set these rules as we go on, that they're going to be very important on how those zones and lines are drawn. So outside of the date, the next most important thing I would say is understanding how you want your rules for drawing these zones to be, or drawing, just drawing these zones in general. You will want to figure out how you want to do those things and establish that before you even start setting up your charts. You have to know exactly how you want your demand and supply zones to be pivoted. So for starters, we'll start with demand and supply, and I'll just go down to 3. It's a decent number. We'll make our demand zone purple, and we'll make our supply zone yellow, just so it sticks out. Alright, let's go down to a smaller time frame, like the daily. So if you notice, I'm on 2023. So what I want to do is I want to bring this data up so that the data moves a lot faster, or should I say the data collects a lot faster. So for now, we get to see I did pick up to 3 demand zones, so it's only showing me up to 3 on the demand side. The only way to increase to find any other zones that may exist, you would need to up this number. And so let's just see how crazy it can get. I'll do 10 demand zones and 10 supply zones. Also notice how price is currently actually at a 4-hour supply. And you can see the date here. I mean, you can see the title here where it says 4-hour supply. So you got a demand zone for the daily. You got a lot of demand zones for the 4-hour as well. Once again, remember, this is my settings. So that's why it's showing me all of these demands. Mind you, this demand wouldn't really count because it's already been tapped into. Same thing like these few demands here. So the most recent demand would be the most important one. Also, if I turn this signal on, this is going to pretty much show me the demand zones down here, even if I turn these off. Let me go up a date. I just need the information to pop up a lot faster. All right, so if you notice on the 12-hour chart, you see this 4-hour demand popping up, this 4-hour supply. And right now, price is actually inside of this 4-hour supply. So that's why you have this sell signal here for the supply zone. So now you can imagine that when these signals start to stack up, then the chart becomes a lot more cleaner. Right now, it's just showing you every time price had a so-called quote-unquote supply or demand hit, depending on what my supply and demand rule is. And so I'm going to break that down as well, and I'll get this all cleaned up. Let me change the, okay, yeah, all right, just need to change the strength of these, the background colors on these signals, because I mean, that was too dark. You couldn't even really see the words. All right, once again, so if I go back up here to the top and I put hide labels, let's see what happens to this supply label and this demand label. They should disappear once everything calibrates. They disappear. And so obviously you would have to just, if it matters or if it doesn't matter, if you in your mind, if you're just like, okay, a supply is a supply, demand is a demand, then cool, you don't need labels. But if you're just somebody that you just want to know the importance of the supply demand, or if you feel like the supply demand is a lot stronger if it's a daily supply demand versus a 4-hour supply demand, then it might make more sense to you to keep those labels on so that you know to, I guess, quote unquote harder at finding an entry for a higher time frame supply and demand zone. So the next thing is going back to defining the supply and demand. So for the definition for starting out, our supply and demand definition was pivot to the next candle's high. That was the one that we started with. So what does pivot to the next candle's high mean? So that means that this candle here, this sell candle, this was the pivot. The pivot means to pretty much change direction. So if the price pivoted from here, it would go to the next candle's high, if that makes sense. So the previous sell candle was a pivot to here. And then if you go to the next candle's high, that would give you your demand zone. If you want to do just support and resistance, because we have our support and resistance pretty much built inside the supply and demand zone. If you want to just do support, the regular support and resistance that pretty much every beginner trader likes to trade, then the supply and demand definition is going to be set to just a regular support and resistance. So now look at what happens when that happens, when that is turned on. Now you're only seeing actual support and resistance levels, key support and resistance levels. So this would actually be a good setting for the specific indicator that you're on if you're a support and resistance trader and you like to trade break and retest, this, that, and the third. So now that we have that defined, you also have your pivot high to low. So your pivot high low candle is pretty much just the pivot from the low of a candle to the high of that exact same candle, not the next candle, but the exact same candle. So let's see how Jeanius calculates and finds supply and demand zones where it pivoted from that specific candle's high and low. So it chose this candle here for this candle's high and low, and it chose this candle's high and low. So if you notice, depending on the setting, you could pretty much shrink or widen your supply and demand zone depending on what your rule is. And the next two are pretty much just pivot to close. So that would be a pivot from this candle's low to the close of this next candle. So instead of pivot to high, just pivot to close. Pivot to high, pivot to close. I think we had this setting first. We had the pivot next candle's close. Oh no, so sorry. That was the setting that I just described was actually this setting. Pivot to the next candle's close. Sorry. Pivot to close is just the pivot of that specific candle that we're focusing on. And you notice all of these are focusing on the starter candle is the same. It's just the rule is different. So the pivot to the same candle's close, not the next candle's close. So you got the pivot to that same candle's high. You got the pivot to that same candle's close. You got the pivot to the next candle's high. And then you got the pivot to the next candle's close. Those are going to be your rules for demand and supply zones. And if you notice when I turned it on, it pivoted from here to here. So I'll kind of, for my supply and demand zones, because I'm not trading break and retest right now, for supply and demand zones, I would just put pivot to the next candle's high, which is pretty wide, to be honest. Yeah, that's pretty wide, but I don't know, it's working for me right now, so I keep it that way. All right, and next you also have, let me turn this off. So once I turn this test off, these signals should go away, and it should just leave me with the drawings and take the signals away. So that signal that you just seen pop up was just telling me that this is where price was testing a demand. If I go to break, this is just going to tell me where supply and demand has broken at some point. So as you can see here, a supply break signal was here. These are all supply break signals. And on the signal itself, you can kind of see where it pretty much tells you the time frame that this signal is belonging to, which is, it says the daily 4 hour. Mind you, these signals would be aligned with what we would be seeing on those time frames if we had everything dated back to these areas. So mind you, it looks crazy right now, but just wait until we start stacking things up. And I won't spend too much time stacking things up, but I'll actually just show how I stack my Confluences up, and y'all can just go back and, I guess, figure out what works for you when it comes to these configurations. So the next signal would be break and retest. We all know what a break and retest is. To be honest, I think I need to, let me just do regular support and resistance, because I think a lot of people trade the break and retest of a support and resistance. So I think I'll have to change that up. And right now, Jeanius is calculating. And this is why I say it's important to have these have the date correctly configured, or it'll take forever for that new calibration to come through. So these are my break and retest signals on the 12-hour time frame. I know that's a weird time frame, but I didn't want to go too low and, you know, make it confusing to not really confusing, but just create too much lag. So I don't want to go too much lower on the time frame. So as you can see, when I clicked on break and retest popped up down here. Same thing if I clicked on break would pop up here. And so what would be my break rule if I said that a support and resistance was broken? My break rule is an entire candle. Somebody else's break rule, which would be a crazy break rule, would be a wick. And so that means that you would feel that if price was at a resistance, that you would feel that the resistance was officially broken, even if the candle just wicked above it, which is not true. Obviously, you would want some form of candle closure to give you that information to get ready to trade in that continued direction, because it broke that level. And so I used to be a candle closure person, where it's just if the candle closes above that support or resistance level, then cool, I would take that. But for now, there are so many fake outs in the market where I at least like to see at least an entire candle closing above, not even just partial, an entire candle, sometimes even 2 candles closing above. But only time I really use 2 candle closures is if I'm looking at a trend line break and retest, a trend line break, sorry. Body majority. So that means that if you're a beginner trader, the body would be the solid area, and the wicked out area is just where price pushed, but it didn't close or open in that area. This is just where price ended up pushing at some point, but it didn't stay there. And so the body is the wide area of this candle here. So a body majority would be over majority of this body would have to have closed above a resistance level. And so let's say that this candle here there was a resistance at the top of this candle because it pushed down, and this candle mostly closed above here. If I had body majority, then this would have been a viable break rule signal. Same thing if I had entire candle, this wouldn't be the entire candle because the entire candle comprises the wick and the body, the entire candle, the high and the low. So this wouldn't work because part of this candle is still touching within this candle's range. And so that break rule wouldn't even work here. But I'll show you exactly what it really looks like once I start tackling on the change of the structure. Where we at? Structure. Yeah. So the bullish and bearish structure signals, where you're actually able to see on the chart in real time where there's a break of structure, whether a continuation of trend or even if there's a change of trend, that will calculate as time goes on by itself. And so you won't even have to pretty much keep up with trend either. So let's go back to supply and resistance. We're going to take these away, drawing these areas. We still haven't started to build our confluences just yet. My break rule, again, is the entire candle. And you'll see how this break rule is extremely important when it comes to how these signals are popping up, because you can have your edge completely wrote out, it could be correct, but if your break rule is not set the right way, then you're going to get false signals that don't align, because obviously I wouldn't want support, break, and retest off of a wick signal. I'm going to get killed every time. Now to the trend lines. So remember back when I said the trend line break rule is 2 candles. Only reason I like to say that is a lot of times price likes to reclaim trends after breaking it. And so a lot of times I like to see 2 candle closures below that trend line to give me that added confirmation or confidence to take that. And so let's see, we will make our trend line, our uptrend green, and just generic color, downtrend red. Well, no, we'll keep it aligned with the chart that I'm on. So we'll do the uptrend blue and we'll do the downtrend as a black line. Let's go back to the daily chart. So as you can see, this is how Jeanius is locating these trends. And mind you, this is on a higher time frame, and so that means we got to go back to current chart, because it's going to give me a weekly trend line, it's going to give me a daily trend line, it's going to give me a 4-hour trend line. So we'll put this trend line test down here, and the trend line test should pop up here at the bottom. So if we look at the signals, if you see here, there was a signal that popped up every time a trend line was touched, depending on what that trend line is. Mind you, we don't really see the trend lines, but I'm assuming if we actually increased the amount of trend lines, now I wouldn't dare put this many trend lines on my chart. And to be honest, I don't like to draw trend lines, I like to draw trend zones. But for you beginners out there, I feel like these trend lines, this trend line assistance tool is really going to help you just kind of gauge where you should be looking for trend lines. So I think this would be very helpful for the beginner people out there that struggle to find those trend lines, and even those resistance and support areas. So you see how the more trend lines I put, you see how crazy it gets? This guy is just absolutely insane. Also, let's revisit this setting here. This current signal setting pretty much will allow you to have these trend lines on your chart, but take them off until they're touched. Now, I don't see the point of having, once again, I don't see the point of having this on for trend lines, because obviously you need to see the trend lines so that you're able to know when to buy or sell depending on how you trade. So I would actually want I would want to see a visual of that. I wouldn't want that to be visible on my chart. And as we stated before, I won't really go through these, but as we stated before, you have your uptrend and your downtrend lines. I put 10 on here. I would never put that many at all. But if I went to a smaller time frame, I won't, because it's going to take forever for it to load up. If I went to a smaller time frame, I think that even though it would take a lot longer, you could get some cool trades located when the trend lines are, especially those daily and those 4-hour trend lines, are located on like a 30-minute chart. And I think that's another cool thing about the indicator as well, is the fact that you're able to keep these higher time frame zones, trend lines, and fair value gaps open and shown on smaller time frames, which is the chart that you'll be on, which is your main chart. And you're able to keep up with the trend even if you're on a smaller time frame. This is a game changer because I feel like it's important to be able to know what the macro trend is even if you're on a smaller time frame. That should keep you trading in the correct direction. And so I think you guys should stamp that part right there. All right, what's next? We have our fair value gap area. Once again, this area also has a break rule. If you toggle this on right here, this is pretty much saying that the only way you want a fair value gap signal on your chart is if that gap is created when it gaps through a support or resistance. If that fair value gap is created but it's nowhere at a support or resistance, you don't care to respect that gap. And I'm assuming that this would be more important for people that like to focus on support and resistance as areas of interest that price wants to go back and retest. And so I think this would be important because it'll be like added confluence pretty much. Like you have a fair value gap at a support and resistance, more times than not, it's going to retest that and fill that gap at the same time. And so I don't use this. I don't have it turned on. I like to see all fair value gaps. But for the people that are specific to their fair value gaps, this would clearly work for you. Also, your fair value gap rule. What is your gap break rule for value gaps? Well, my fair value gap break rule is I just want a wick. And the only reason I say I just want a wick is because I just need price to touch that area to signal that the fair value gap is reached. And so I don't need an entire candle to break the whole fair value gap. If I do that, then technically I've missed my fair value gap trade. Now, if you're somebody that doesn't trade fair value gaps in terms of filling those gaps, but you might trade, instead of trading the gap fill, you might trade the fair value gap where you're looking to buy in that area after some form of like liquidity sweep or touch of demand after a change of structure or whatever. For all you ICT people, is it ICT, inner circle? Yeah. For all you ICT people and whatever other terms y'all like to use when you're trading, I think that this is going to be important for you guys as well. And so I would like to see how cool it's going to look for all of my ICT people to actually use this to automate on screen their ICT strategies, sifting through all of these settings. So I can't wait to see what you guys do with that. Next, we have the bullish fair value gap. And so I have my gap signals, I have my gap rule signal to wick. So all I need is price to touch that area. And now I'm going to toggle on my fair value gaps. And I'll make my fair value gaps green and my bullish fair value gap green and my bearish fair value gap red. The reason I'm doing that is because I don't want my fair value gap zones to look like my demand zones. That's why I have those set to different colors. I have to have them set to different colors. If not, then my bullish fair value gap is going to look just like my demand zone, and I don't want that. I need to know the difference. But also turn the signal on. So the point of me, remember, you don't have to turn a signal on for certain things. When you turn a signal on, that adds it to your confluence box. Everything that we're going to put in this box at one time, they're going to be confluences with one another. And so it's important to understand that when you start adding stuff as a signal instead of just a drawing, that it's going to go down to this box. So you don't always have to add these signals. Now, if you just want to see where other fair value gaps were located at some point, where fair value gaps were triggered. So look here, you have the fair value gap here. And for the sake of the video, I'm gonna do you one better. I'm not gonna draw the fair value gap. I'll let Jeanius draw the fair value gap. So you have this fair value gap here that price hasn't touched just yet because this is the fair value gap right here. Remember, my break rule is a wick. And so for the sake of this example, I'm going to go back up here to the top and I'm going to say only draw these areas on my chart when price touches it. So right now these two are remaining because price is still touching this fair value gap here and price is still touching this fair value gap here. That's where you see this wick at. So if you notice, the wick touched into this area, boom, fair value gap. The wick touched into this area, boom, bearish fair value gap. Now, depending on the structure of the overall price action on the time frame, that would determine which one of these fair value gaps hold precedent. And obviously, you know, this is a lot of selling going on right here after this inside movement on these daily candles. Clearly there was some consolidation within here and it dropped. And so this could be a supply zone up here somewhere as well. I won't turn that on though. So let's see what happens when we touch into this fair value gap, and let's see if it pops up. So price touched into this fair value gap, and not only did it pop up here, but it also popped up here. The reason it popped up here is because I have it where I need the signal to only show when price is touching here. And when I turn that on, if you notice, all of the other signals went off because it says draw current signals only. So that means any old signals won't pop up on my chart, only the current signals. So for that day, that moment, that time, whatever time frame, that's the only time you would see a fair value gap or anything on your chart. When it comes to fair value gaps, supply and demands on the trend lines, it would only show up if the current candle or price action, depending on the chart you own, is actually triggering that specific signal that price is at a support, or price is at a demand, or price is at a supply, or price is at a fair value gap. That's the only time that would happen, which is also why I don't really like to use draw current, because I want to see everything. So we can turn that off, clear again. All right, where were we? Fair value gaps. All right, so this is probably the most important signal that I like to use. It's very important. I don't really like to signal untested highs and lows, but the way that Justin Larkin created the indicator, he wanted the untested highs and lows to be areas of emphasis when it comes to figuring out what my targets would be if I was targeting anything. And so when you see the drawing of the untested highs and lows, these could almost work as support and resistance levels, if you will, because you can use these as areas to target this. Either this high or this low is going to be touched first. One of these are going to be touched first for the untested high and low. And if you notice, I had 3 of each on both sides. Now, if I turn the signals chart on, if I turn this on, it's going to show me all the signals back in whatever time where an untested high or low was touched. So if you notice, the untested high or low signals are a lot more cleaner, which is pretty cool. But remember, you don't actually need, if this is not going to be something that you care to pop up down here as a confluence, and you just want to see it on your chart, then just turn the signal off. You can still keep the drawing on your chart. It just won't be a signal that's added to your confluence box. Remember, this is your confluence box, or that's how I look at it. But it's also an area where it just shows those signals pop up. And once again, when I get to that point, once we do start stacking the confluences, remember, if it lights up fully, that's great confluence. But if it doesn't light up fully and it give you your 3 out of 5, that could still be a point of emphasis to take the trade. It just depends on your discretion. So let's look at what happens, where it goes. I just want to see where it goes. So it created new untested highs and lows. Remember, this is the daily. So these untested highs and lows can still be held true on smaller time frames. So when we were inside of here, first it gapped up and tested this high, and then it turned around and gapped down to test this new pivot low and also this pivot low. So it tested both of those. So this would have been a nice trade if you were actually like trading within the day, and then you kind of had that target of, you know, this low or maybe this high, because this untested high is pretty much broken. And that's something we'll toggle on at a later date, where when those areas of interest are broken, we'll allow you guys to toggle on if you want it to remain as just a continued area of emphasis, or if you want it to, I guess, disappear once it's touched. So one of my number one settings that I like to use is the Larkquidity suite. So clearly it's pronounced liquidity suite, but because my boy Justin Larkin created such a game-changing indicator, and he's also a liquidity sweep trader, we named the liquidity sweep after Larkin. And so, you know, it's no longer liquidity sweep. So when you address us, you say Larkquidity sweep, not liquidity sweep, because then you would be saying it wrong. But here's every area where a Larkquidity sweep happened. And remember, this new market that we're all trading in, whatever market you're in, it doesn't matter the market you're in, there's a lot of liquidity sweeps happening on a daily basis on many time frames. And I think this would be one of the, especially for you ICT traders, this would be one of the most important signals on this. One of the most important signals to use is the Larkquidity sweep, because obviously this is where you're going to eat the most, clearly. But just the Larkquidity sweeps alone, you can kind of see where when those sweeps happen, there were some big moves after those sweeps. And so, you know, just this alone without any other confluence is a really good signal, or signal within the indicator. If you notice, I'm struggling to not say signal because I don't want it to be signals. I don't really like signals. I don't want to tell people when to buy or sell, but I would want people to know why they're buying or selling. I think that's the beautiful part about this indicator, again, is when those combo signals start to come up, you will know why, because it will tell you everything down here at the bottom. You will know exactly why you're buying or selling. Also, you have on these Larkquidity sweeps, you have different pieces of information. It shows you the price label that the sweep happened at. It shows you the drawdown after the liquidity sweep happened, and it also shows you the volume. Let's get these off the chart. Did I have the signal on for liquidity sweep? I did. Okay, yeah, I had it on. Just as a quick reminder, once we start stacking confluences, you won't see like a bunch of signals all over the place. It won't be crowded. It's going to be consolidated only to those signals. So even though there's a bunch of signals that pop up, I'll show you what they all look like as one, and then I'll show you what they all look like once these signals are combined with each other and how it cleans up the chart. This is another important area. You have the structure and trend concepts. And so you have, how would you want your structure of your trend to be created? And we all know what a trend is. Trend is higher highs, higher lows, sideways movement, equal highs, equal lows, or, you know, lower highs, lower lows. Uptrend, downtrend, range. That's your structure. We all know what I would hope we all know what structure is. And if you don't, it's okay. I mean, that's the point of this indicator, to allow the newbies to have a lower barrier to entry into trading, because this indicator pretty much automates a lot of that stuff for you. So it won't be as difficult to acclimate yourself to trading once you have this slapped on your chart. So for the sake of the structure of the trend, I like to just do an entire candle. Having an entire candle close above a structure, whether that's above a support, below a support or above a resistance, that'll give me that break of structure where there's a continue of that trend, or that'll give me a change of character where that trend has officially begun to change. And remember, these are very important. So depending on your break rule, that's going to tell the indicator or the algorithm what the trend is supposed to be according to this. So if you change this to wick, you're going to have some weird looking trend changes, and it's not going to be the real deal. You might have a trend changing before it actually changes because you put a wick instead of an entire candle. And trust me, I've played with these before. Between the entire candle and the 2 candle closure, these are going to be your strongest settings to have for this break rule when it comes to having some accurate trend changes, to be honest with you. Then you have your short and term value. With your short-term and long-term swing value, it's pretty much calculating like a moving average, pretty much calculating those last few candles, and it's pretty much using that to calculate the overall swing value, whether that's on a short trend or a long-term or short-term. This helps when it comes to that point of the indicator where you're setting your long-term and your short-term trend. This is very important for you. I just keep these settings the same, but this is very important because say if you're a Confluence trader and you want to, say if you're a trend trader, but you're also a Confluence trader, and let's say you want only to see signals that are in alignment with the full trend. So you don't want to trade against the long-term trend. You want to trade with the long-term trend and the short-term trend. Mind you, this is going to take away some good trades for you, but this will give you some really solidified trend trades or signals, if you will, for Confluence, because it's going to give you the overall direction. You're going to be trading with the overall direction on a small and a long-term level. So I think this is really good. Sometimes I just like to put on the short term, especially if I'm on smaller time frames where I'm day trading, because I don't know, it just allows me to just be more accurate with my trades on the smaller time frames. So on the smaller time frames, I don't really use long-term trends. But once again, nothing is definite with me. I'm always kind of going back and forth, turning it off, just trying to see where I can find any confluences that add with the way that I already trade anyway. I still do my own TA. So that's just a warning to everybody. I still do my own TA, but you don't want this to be, I guess, a crutch where you're feeling like Jeanius should do all of the work for you. You still need to have some understanding of what you're seeing with price action, so that when you do build around price action and you do build around your edge, your trades will be more crispy and your entries will be more crispy, depending on what you've selected within the indicator itself. So now we'll go into the structure itself. You have your bullish structure, and I'll have that as blue. And you have your bearish structure, I'll have that as black. And so you can either turn just a break of structure or just the change of character, or you can turn them all on. This way, obviously there's no other way to do it, turn them all on. This will allow you to see every time structure has changed or structure has continued with a break of structure on whatever time frame you're on, only if you're on a long-term or short-term trend. So it's going to show your structure, but as these signals pop up, you won't get full confluence unless the signals are showing up only with the long-term trend. So that means if you have a buy signal that's going the opposite way of the long-term trend, then it's not going to pop up down here. You won't get that buy signal. Why? Because you told Jeanius to only give you those buy signals, even if it was a trend line touch or a break and retest or whatever the hell you put in. It doesn't matter. What you put in only pops up if it goes along with the trend. So a lot of times I like to turn both of these off, and I'll turn them on again when I start to show you guys how it looks with those confluences on. I like to turn these off just to see where all of the real signals are coming in at, all of those real combined confluences coming in at one time. Then I'll actually make a decision on, and is at my discretion again, then I'll make a decision on if that area is important to buy or sell at, even if it's going against the long-term trend, if that makes sense. So that means if the long-term trend is up, but we have the short-term, if this whole thing is a long-term trend, but the short-term trend is like right now, the short-term trend is down, or it would be down. I'm sorry, no, it's not down. And the reason how I know this is because I'm looking at these breakup structures and change of characters right here. So let me go back and make sure everything's on, because I'm gonna go down to a smaller time frame just so you guys can see what it looks like. Okay, so I'm glad that this popped up. This is that error thing that I was telling you about. So this error message was saying that remove the indicator and reapply it to the chart. So I'm glad you guys are able to see this in real time. So what I like to do is I just kind of remove it like this, and then I hit the back button to just add it back on. That'll give you your quick reset. That'll be cool enough. I'm also going to drop this one more year back because I want to see information of 2022 as well. That way I can kind of get a good look at those pivots as the indicator is calculating the change of structures. So you have long-term and short-term change of structures. This is going to help you with your long-term and short-term trend. The short-term is the dotted lines, and the solid lines are the long-term. That way, if you're looking at, so say how my candle break rule was an entire candle, this little candle here counted as an entire candle. So with this little candle here counting as an entire candle, this created a break of structure on the long trend to continue the downtrend. But what happened is this pivot high here was broken with a full candle here, which created the change of character to the upside. And once again, if you're an ICT trader, once you get that change of character break here, you would also be looking for the sake of me drawing this real quick, I could have used Jeanius, but I'm gonna just draw it real quick. For the sake of an ICT trader, you wanted price to kind of come back down into this fair value gap area, wherever it left a fair value gap, and it tapped into that fair value gap, and then it continued up. You also could have saw that it broke this high and created a new high, and there was a retracement. So you also could have did something that putting a Fibonacci level on here and getting your levels that way. And that's something that we're gonna look forward to, I guess, including into the indicator. Next is automatic Fibonacci levels. I think that's gonna be really cool for a lot of people as well. But yep, look at what happened at this Fibonacci level, at this fair value gap. It tapped right at the 50%. This would have been great confluence. Now, if you're like a MACD and the RSI and stochastic individual, maybe you could have looked for some added confluence in this area as well. But, you know, that's, I guess, just an example for now, how you would have, you know, kind of used part of what you already know and part of what the indicator is telling you as well. I'm gonna go back on my own. I just want to see what this looked like if I had this fair value gap already added to my chart, and how it would tap into it and light it up. That would give me that green light to just be like, boom. So yeah, that's the structure. You guys can see it. It broke structure here, continued up, traded sideways, still had to break a structure here, turned around, had a change of character here, where the downtrend was now activated. Then what you get, you got a little small downtrend. There's a solid change of character. Remember, the solid change of character, the first one happened here. So the next solid change of character is deemed to be here, which means that our overall trend is now, the long term is now up. As this trend was going up, the long term was still down. So if the long term was still down after this break of structure here, then obviously you would get some type of pullback into a supply area and then get that drop, which is pretty much what you got right here with the supply area. And then you got that drop, but then you still had a move up to where it broke the overall structure or changed the overall character of the price action, turning into an uptrend, coming back down. Remember, the ICT individuals, they come back down, they find some type of fair value gap, which is all the way down here. You can also say that this is a really big demand too. There was a lot of consolidation right here. So you could say that this is a double whammy. It dropped into a demand area and a fair value gap and tapped in. That would have been a good buy here. Yeah, and then you had the trend continue up. And yeah, so long term, short term, you can see these in real time, or you can kind of just add them to your chart and have it down here as part of your confluence signals. All right, last but not least, you have the moving averages area. This is an area that I love because I like to use moving averages as reference points, if you will, when it comes to overall trends. And so there's a rule where, obviously I go against this rule sometimes, but there's a rule where you have where the 50 is above the 20, that's signaling a strong trend, or you have the 50 is below the, not 20, where the 50 is above the 200, and you have, if the 50 is below the 200, that tells you if your trend is strong to the upside or strong to the downside. So pretty much a golden cross or a death cross. And so for the sake of drawing this on SPY, I can get out of this mode as well, I'm going to draw the recent moving averages. So you have your moving average 50 and you have your moving average 200. So let's say that even though there's a buy signal here somewhere, I wouldn't get a buy signal. You know what? I still would actually get a buy signal now that I'm thinking about it. The only reason I would still get a buy signal is because the 50 has not crossed below this 200 moving average. And so if this was one of my rules, then it would still stand that I needed the 50 to be above the 200 to pretty much show me to pretty much give me buy signals. And I could have that set here. I could take these off my chart. Say if you're somebody that you don't like to use moving averages per se, but you like to reference moving averages. So instead of me having to turn the moving average on and off, I could just leave the moving averages off my chart, but then I can give myself that condition to say that when the 50, which is number 3, is greater, good Lord, what is that? Oh, okay. Oh, okay, that's giving me that signal. Good Lord, I'm gonna turn it off for now. When the 50 is above or greater than the 200 moving average, that's gonna give, I want all my buy signals to only pop up for that condition. Same thing with the second condition. If the 50 is below the 200 moving average, I only want you to show me sell signals when the 50 is below the moving average. So you can only imagine, once I start stacking these confluences, how accurate this could really get depending on the confluences that I'm stacking together. And so that's going to wrap up the entire walkthrough of the Jeanius indicator. So for this last part, we're going to go into confluences. And yeah, you have the proximity type right here, but we'll just do percentage. We're not going to do pips. And proximity type is pretty much just what the proximity of this signal for moving average that you want to be. And so close to the condition range or far away from the condition range. This is for people that like to, let me see how I'm going to explain this. This is for people that like to acknowledge if there's a move, if there are two moving averages of emphasis, and if they're further or closer apart, that will determine the strength of that trend. So if you've ever seen, let me see if I can move these moving averages on, put these moving averages back on. If you've ever seen moving averages get close to one another and spread apart, price usually moves a lot better when they are further apart. And so if you look at how these moving averages are close to each other, that causes price to have a lot of consolidation. But if you see where the moving averages start to split apart right here, so as you start to see this split, this would be where your proximity would come in at. So let's say that you wanted your proximity to be focused on being further apart. Then this would be a part of, I guess, that specific moving average, depending on how you set your percentage range. These are both set to close, by the way. These are both set to very close, but it'll be within this percentage range. And so that'll allow you to get signals no matter what. But if you set it to further apart, then obviously it's only going to give you signals further apart or closer together, depending. So as you can see, as these moving averages split or go further apart, the price starts to stick with the lower moving average and it starts to move higher because these two guys are splitting apart. Same thing when they start to come back together. You see that as they come back together, price starts to consolidate between the two until they start to split apart again and create that really, really strong. And you can see the split right here as well. You can see the percentage difference right here as well. So this also helps with seeing how close or further apart they are. Because if they were here, then you would kind of see it at this price, 431, and at 425. So they would be very close to each other. But right here, they're very far apart, which should give you some type of indication that they're both still strong. So once you start seeing these two move closer to each other, even if you just looked on this end here, that'll give you that indication that there should be some consolidation going on before a new direction is formed. And remind you, this is on the daily chart. So these signals look different on each chart. So this is just the daily. This could look completely different on the 10-minute, on the 1 hour, or whatever. So let's wrap this up. We are going to go into our confluences. So first I'm going to check on combine all checked boxes for buy and sell. I want to combine all of those together. That means that everything that pops up right here, I want to combine all of those things together. And before I combine them together, I'm actually just going to click them all on just so you can see what it looks like. So we have support and resistance. You know what? I'm going to go pivot to next candle's high. Oh, wait, should I do regular support and resistance? We'll see. We'll toggle. So I have my definition set for my supply and demand. I'm going to toggle on my supply and demand test. I'm going to toggle on my Larkquidity suite. I'm going to toggle on short-term and long-term. No, I'm gonna keep these off for now, and then I'm gonna add it down here and just show you the difference and how the signals pop up. And I'm also gonna toggle on these two as well for the buy side and sell side. So if you notice, when I said that my rule is if the 50 is above the 200, then that's a buy signal, and if the 50 is below the 200, that's a sell signal. That's gonna pop up on the buy. I'm telling it to pop up on the buy side or sell side. So for now, I just want to show you what this looks like these are the two signals that I'm combining. You see them down here, liquidity sweep and demand. This is a bunch of stuff going on right now. And so what I'm going to do is I'm going to combine all of these signals together. What happens is it doesn't just combine them together. It only shows when those signals pop up at the same time with each other. That's all it's doing, is just showing you when those signals are popping up at the same time. So as you can see, this chart looks a lot more clean. And you can also see where it's better at calling those pivots to the higher or to the higher or low. So you have this. Now obviously it's not 100% accurate, but it's a lot accurate than it should be, just off of these two signals alone. I haven't cleaned anything up or anything like that. Now obviously it will work best with cleaner trends, and I might go to a lower trend just to kind of show what that would look like. I'll do that, but I need to figure out what data range I want to use. I may use this data range here just as a example because it has some good trends right here, and I think on a smaller time frame this would look good to see what that looks like. But what I also want to do is, real quick, I want to see what it looks like if these signals pop up only if it's trading with the short-term trend, whether that's to the upside or downside. And so you see right now it just added the short-term trend. The short-term trend is up. So if you notice that anytime the short-term trend is up, I only want buy signals with that trend. That means that if the short-term trend is down, it won't give me buy signals, it'll only give me sell signals. So if you notice, I got a legitimate sell signal here 3 times at this top because this change of character happened on the short term. Remember, the dotted lines is the short term. And so this change of character happened on the short term, and after this change of character happened on the short term, it came back up for a sell. And for those ICT individuals, once again, you have that gap right here that formed, and with the formation of that gap, you can even go as much as saying this, but after the formation of that gap, what happens? It goes back into that gap. And mind you, I could use Jeanius to draw this, but I'm just doing it by hand because I need to just be quick. But it touched it after it changed the character, it touched into that gap and allowed us to make that move down. And so even if you wanted to slap a Fibonacci on here, and I can't wait till we automate that as well, that would have been a good area of confluence as well, because if I'm looking correctly, this would definitely be close to that 50% line, just for me eyeing it myself, and it'll give you those extensions down to how far it could go, which it went back to this area of demand right here where a lot of consolidation happened at, and it just shot up from there. The market just absolutely rocketed since October last year. So let's add another piece of confluence on here just to see how it changes. So right now, wait for it to pop up. So right now you have the long-term and the short-term trend both up. And if you notice, the buy signals that are popping up are pretty much, they've been 100% accurate since the beginning of this trend up. Now, the only reason you don't have sell signals for this pivot low here and all this other stuff, the only reason you don't have sell signals, even though there's a sell signal popping up where there's a liquidity sweep, this isn't important because my rules are I'm only taking trades if it aligns with the overall uptrend and on the short term and long term. So here's an example where this is a downtrend, but you still have the buy signals popping up here only because of the confluences that I have here, but that's still kind of like fusing because it's still in the uptrend, but this is your pullback. So at a pullback, obviously you would want to buy at a strong support level. Now, granted, if I'm a support break and retest trader, in hindsight it looks good, but if I'm a support and retest trader, then this resistance at one point became a support. And you know, it did hold a little bit here, but right after this small little push, it just tanked. It just tanked. So this is one of those moments where I guess this is a teachable moment for everybody, where just because you're seeing these combos pop up, you still want to build as much confluence, and you also want to have rules of entry that align with yourself. That's important to you, because even if I see a buy signal here, I'm looking at the way this candle formed, at the fact that it's broke this little pivot here. Me personally, I wouldn't have taken this buy only if there was a candle closure above this candle here. I would need a candle closure, a bullish candle closure above, and I needed a break of this small trend where the candles were falling down at here. This is the only way I would be like, okay, cool, I could take that, because then I can see the candles trend changing. And once again, if you don't know, every candle is a trend. Shout out to Al Brooks. Every candle is a trend, whether it's a 1 minute candle, a daily candle, or a 3-month candle. It don't matter. Every candle is a trend. So you should still treat every candle with some level of respect as it pertains to price action and entering a trade, not just because a signal popped up. Even with the signal popping up close to this support level that was once resistance, even with this signal popping up, it popped up on a sell signal. So you would still need the candles to form more to give you some type of confluence to the upside. Another rule, and I'll just kind of give away some sauce right now. Another rule that I've accumulated, or not accumulated, but another rule that I've added to my system is, even if there's an engulfing at a support level, they know that most people are looking for candlestick patterns. So even with this engulfing here, I would still be interested to see this trend that was formed here. I would still be interested to see this trend break, because you see when it got back here, it rejected. So even for me, if I'm watching this and I see this buy combo coming up, and even if I saw this break above here, I'm still reminding myself that price still has not broken this trend. So I would need some level of follow through candle on top of the one that engulfed. I would need another follow through candle, and then I would just wait for an ideal entry on a smaller time frame as the trend keeps forming. But I would need that confirmation on a smaller time frame. Right now, I wouldn't have entered this trade again, but this is just me giving you guys some of the sauce that I use when I trade. Obviously, there's more to the sauce, but I won't be giving it to you, not for free. But yeah, so let's drop to a smaller time frame just to see what these look like. And I'm also going to add on these 2 moving averages as well, because I just need you to see what they look like. This, before I even add the conditions on here, I need you to see what they look like. Because right now, if I added the conditions to both sides, both of the sell sides, I wouldn't have gotten this sell signal right here that I had before. Once I started adding all this stuff on there, this sell signal was taken away. As soon as I added long term aligned with the short term, you notice this sell signal went away. So that's why I say too much confluence is not always good either, you know? And so you don't want too much confluence. Now, if you just want perfect entries, then hey, you'll be waiting, but you'll also get more bang for your buck as well if you take those perfect entries. But even right here, where this was a good buy signal, but the moment I say that I only want buy, nope, once again, I'm confusing myself. So the buy signal still is viable, even if I did add it to the chart down here where I wanted to only see buy signals where the 50 moving average is above the 200 moving average, because technically the 50 is still above the 200 moving average. So this buy signal still would have been, you know, I guess a viable buy signal to take, or it would have been a viable buy signal to pop up because of the fact that the rule still stands. So let's try to break down to some smaller time frames, but first let me July the 27th and October the 27th, up to 27th. July 27th and October 27th. And this is another cool part, but going back to this date, you can kind of set those intervals to do your back testing. So that's another thing I like to use this for, is back testing, because once again, it's automating what your strategy is. Whatever your strat is, Jeanius is going to automate it, and you can add it to whatever time interval to kind of see where did these combinations pop up at. Why did they pop up there? How many popped up there? The whole nine. Make sure it's the right year. 2023. 2023. Okay. All right, let's let this calibrate real quick, and then we can kind of get into our interval. So if you notice, everything outside of this interval has nothing in it at all. So let's break down to a 4-hour. We should be able to get away with this 4-hour now because the interval is so small. So within this interval, you have the long-term and short-term trends being down, but you're getting some weird signals. And so this is where you start to kind of play with, this is where you kind of got to play with those settings to figure out which one works the best. And so for me, I'm going to keep the short-term on. And I also want to see what happens if I put on the conditions for the moving averages. to only show buy signals and sell signals. I should have included this one because this would have had some good buy signals in it. I also want to drop down to another level. I'll drop down to the 1 hour just to see what it looks like. And it shouldn't take forever to pop up. I do have a small interval here. All right, so at the bottom it says, I'm only focused on short-term trend changes, which is on the long side and the short side. And I'm also only focused on when that moving average is above or below the 50. It's above or below the 200. That's the only time I want to see my sell signals. So as you can see, when this 50 moving average starts to trade below this 200 moving average, I'm only calculating sell signals right now, as well as it being a part of the short-term trend. And so if you notice on a smaller time frame, so this is why I say time frames matter. And this is why I broke to a smaller time frame, because I wanted to show how interesting this looks. So you continue to have the short-term trend to the downside. As the short-term trend focuses on the downside, you only get these sell signals. But you have a lot of consolidation going on right here in this area where you're getting sell signals even with a pullback, only because you see that the 50 is below this 200 moving average. So it wasn't going to give you a buy signal even if it wanted to. So what we'll do is we'll take all of this stuff off. And this is just going to be my last example. I'm going to take everything off. I'm going to take the short-term long trend off. And I just want to see exactly where all of these signals are actually popping up at. And mind you can always go back and just play around with these settings and figure out where the best buy signals are going to come in at. What does it look like? When is the best time to take it? So if you notice, even with the market going sideways these couple days, it was still giving you some good sell signals and buy signals at the pivots. Now, would you be taking a lot of these buy signals against the short term? That's on you. But right now, if I see that the change of characters are happening to the downside, then I'm really only looking for sales until that's just me waiting for that legit confirmation. That makes me more patient. I can get some good trades like that. But if I'm impatient and I want to trade every direction, every single day, all day on every time frame, you're doing too much. And that's going to cause you to go through a level of a stage of paralysis, or analysis paralysis, what they call it. So you still have this little trend here formed. I'm pretty sure if I go down to a 15 minute, there's a trend change somewhere down in here. I wonder, could I go down to the 15 minute without it cutting off on me? So the 15 minute looks even more interesting. And so once again, like I said, when you're on those smaller time frames, that's when it's like the most important to kind of get those get that structure alignment. And so I'm gonna start with the short term first, just to kind of get that structure alignment, and then I'll add the long term as I go. And remember, I'm only using two things. I'm only using demand and Larkquidity suite. So I can only imagine, like, once I start adding more stuff to it and what that looks like. So if you notice, all of this consolidation and stuff is causing a lot of confusion, which is why you're getting a bunch of sell and buy signals here. This is when it's most important to, that's why I say those smaller time frames can be real tricky, because it's a lot of volatility, it's a lot of swinging pivots here and there, and so it's less accurate. You're more accurate when you're actually finding these things on higher time frames. Like a signal on the weekly is a great signal. You can really eat off of that. But if you don't have your settings set up correctly on these smaller time frames, you're gonna have some trouble. So what I'm doing now is I'm just kind of looking at the 250 moving average, just to kind of see what signals popped up in those areas at what time. So this would just be another example of if I did have that conditional rule on, and I'll just try to look what it looks like, and we'll wrap it up after that. I just want to see what it looks like. That conditional rule where the moving averages play a part in my entry process. I just want to see what it looks like. Yeah, so it was pretty clean at one point. Once again, this goes back to that proximity setting, where the importance of the closeness or how far the moving averages are to each other, that is a huge indicator of a no trade area. So I also like to look at that as well. The moment I see the moving average trading sideways and crossing over each other like this, I literally never trade, because this is not a trend. It's not trending right now. Now, obviously, if you're somebody that likes to trade like those ranges where there's a lot of volatility, then that's cool. But for me, these are areas where I don't like to trade, and I honestly don't trade. unless I'm getting that confluence on a higher time frame. If I went back to the daily, this would be a sale sitting on the daily, but then I would still have to figure out where the trend break is happening, and then I would just have to kind of get in where I fit in. And so this trend break here with the break and retest here, that could kind of give you the added confluence. But all right, everyone, that is it for the Jeanius indicator comprehensive walkthrough. I hope everybody was able to gain something from this tutorial, and I hope everyone is able to become more profitable by using the indicator that we've put together for you guys. If you have any questions, hit us up in the messages, hit us up in the comments. You can also hit the link on the main YouTube page where you can get access to this indicator for free. We do a 7-day free trial. Anything else, just hit us up, let us know. But hopefully this helps anybody, and yeah, appreciate everybody for watching, for those that do watch.